Hey guys, welcome to the new lesson, and this is our last sub topic under the main topic liquidity. And in this lesson we will learn how to trade using the trading session liquidity. Okay, how they play a big role in liquidity trading and how we can spot them as liquidity in the market. Okay guys, so I'm excited this evening because we are almost coming to the end of this training session that we started about 2 months ago, and I'm glad to help you guys achieve a dream. So without much talking, let's look at what we want to go into this particular evening in this lesson. Alright, before I dive deeper into the lesson, know that there are different types of strategies and system to trade sessions. Okay, that is trading session. And when I talk about trading session, I'm looking mainly at currencies, okay, and indices, not volatility indices. Okay, we have indices under currency trading also, that is USDT and so on. Okay, so these trading sessions also play a vital role in how market behaves, but we are going to be looking at these trading sessions from the perspective of what? Liquidity. So I want you to be open-minded as we go deeper into this lesson, because all our trading concept has been built around liquidity. The true SMC concept has been built around liquidity, spot a valid OB with imbalance, make an entry based on confirmation on lower time frame, you take your trade, you are gone. You understand? So both our entry and our exit concept or plans are all based on what? Liquidity, imbalance, and valid OBs. Okay, they all work hand in hand. And before I continue, if this is the first time you are watching our lesson, do well to go back and watch the previous lesson, because each lesson aligns together with the other. So if you are just watching this one, you have to go back and watch from the beginning of our training so that you can get a perfect understanding to all that we have learned so far. All right, don't also forget to subscribe to the YouTube channel, turn on the bell notification icon so that anytime we upload a new lesson, you will be informed that Accurate Pips have uploaded a new video. Okay, Accurate Pips have uploaded a new video. So do well to subscribe, turn on the notification, also like this video. All right, so let's get into the topic. Okay, now one thing you need to understand, again, before I explain what we are coming to look at, one thing you need to understand is that most traders are active during the London and New York session. But even though they are active during the New York and the London session, the detail from previous session is always important in identifying where the next session is going in terms of direction. Okay, so for instance, let's say I want to trade in the London session. I need to know what happened, the details that occurred during the Asian session. Even though I'm not trading within the Asian session, I need to understand the details that have occurred during the Asian session, and based on that detail I will be able to analyze the market for the direction of the London session. And same way, if I'm somebody who trades only maybe New York session, I need to understand what is happening in Asian session and also what is happening in London session, and then I base my analysis on that, coupled with other things that we've learned from the beginning, change of character, liquidity sweeps, what is the name, valid OBs, and all that higher time frame analysis down to lower time frame analysis. We need to look at all those things before making any decision in the market. Okay, now let me talk briefly about how the Asian session, the London session, and the New York sessions play a big role in this trading concept. Okay, so the Asian session, as I said earlier, the London session and the New York session are mostly the high volatility session, but then the Asian session is mostly seen as the low volume session. Okay, so most active tradings are done during London and New York, and because low activity is done during the Asian session, that is why it is having the low amount of volume among the three major trading sessions. We have other trading sessions, Tokyo and Frankfurt and co, but the major ones are the Asian, the London, and the New York session. All right, so the market normally begins to pick momentum from the London session towards the New York session. Okay, so during the London session, market pick momentum to either go up or to go down, and this is because that is when most traders are active or begin their trading activities. So because most traders are beginning their trading activity during the London session tends to push momentum into the market. All right, now the New York session is largely a high volume session as well, because most active traders from London still do join New York. So New York traders now coupled with London session traders together increases the volume of the New York session. Now one thing you need to understand is that both the session highs, okay, and lows act as liquidity. When I talk about session highs and lows, I'm referring to these boundaries. So for instance, this is the Asian session, I'm representing here London session here, and then New York session, and you can see the highs and the low. Okay, so this place acts as liquidity, this end also acts as liquidity. Now how does this help us? Okay, so one thing you need to understand is that once market breaks a session high, so for instance, let's say here market breaks this session high, okay, or market breaks this session's low, most of the retail traders who are waiting for breakouts, okay, will begin to sell from this point and put their SLs above. Now support traders will also begin to look for buys at the area below the session low, and then they also put their stop losses below. Okay, now when that happens, there is a lot of liquidity pump into the system for smart money traders to be able to pick those orders, grab those liquidity, and then turn the market in their direction, either to push the market up or to push the market down. Same thing applies if the session high is broken, the breakout guys begin to buy and place their stop losses below, and then the resistance guys also begin to sell and place their stop losses above. So that creates a lot of liquidity in the market. Okay, so that is one thing you need to understand. The reason why that area is a strong liquidity, or session highs and low are strong liquidity, is due to these factors. As I said at the beginning of the lesson, I told you that we have a lot of strategies that we use in trading trading sessions. Okay, everybody and the strategy they are using. People use breakouts, people use them as support and resistance areas. Okay, people wait for a breakout and retest to be able to buy or sell during these sessions. But we are looking at liquidity because we are liquidity traders. Okay, we are liquidity inducement traders. All right, now what happens is market collects all these monies, okay, those buying and selling after the breakout and placing stop losses. The market comes, collect all their money, okay, and then when the next session opens, all right, then market makers will either push the market upwards or lower, depending on where the liquidity direction is pointing towards. Now, it's not by force to understand this particular topic, trading session liquidity, because we have dealt with different types of liquidity, but understanding this increases your probability in the market. Okay, so now let's look at this illustration here. So this is our Asian session, okay, which I told you earlier that is our low volume session, okay, because we have less active traders during this particular hot session. All right, so first thing is that we have to locate our Asian session low and high. So here this is our low and this is our high of the Asian session. Okay, good. And then once we do that, there is two ways to trade this. Okay, there is two ways that we are going to trade this. Now, if market just break the session low and then sweeps, so market breaks here and then sweeps below it. If I say sweep, by this time I expect you guys to understand what I mean by sweep. So let's say the candle like this, and then the wick comes below, all right, and then sweeps and the body closes above this low. Okay, once that happens, all that you need to do is quickly move down to, if let's say this is your 15-minute higher time frame, quickly move down to what, to 1 minute time frame. Let's say this is your 1 hour time frame, you quickly move down to what, to the 5-minute lower time frame. Then you look for entry confirmation on those lower time frames, either change of character with inducement, and then you enter, or you can look out for the single candle order block, which will be, these are things we'll be looking at under entry model, which is the next topic that we'll be starting very soon. Okay, so once you have something like this, just a sweep below the low and a candle body close above the low, then it means that you quickly just sweep. I will explain what this OB is doing. Let me put this wick well. Okay, this is a sweep without tapping on OB. Then you switch to lower time frame, and then you look out for change of character, an inducement, and then you buy. Okay, all right. So now the second scenario is that, let's say the low here is broken. Okay, the low here is broken, and there is a candle body closure. Okay, so let's say the body of the candle closed below. This time the body of the candle closed below the low. Okay, now once this happen, okay, let me increase this. Once this happen, then what you need to do is this. It means that we have to go and look below the session low. Okay, we have to look below the session low and see if there is a POI on the higher time frame that we are doing our analysis on, that is unmitigated. If we see a POI which is unmitigated and price taps into that POI, that thing happened on, I think, GU. When I analyzed GU for you guys, let me see my GU chart. Let me turn off this for now. You come there. So GU here. Okay, during Sunday's class, I talked about this daily high from this side. Now market candle closed above it, but there was a what? A zone. There was a zone, an OB, an unmitigated OB above that daily high. So what happened was price went and tapped into here, this OB. Price went and tapped into that what? That zone. And once I see that, the next thing I did was to what? Was to move down to my lower time frame of what? 5 minutes and 1 minute, and then I look out for what? Change of character. Price taps back, taking inducement. I made my first entry. Then price again, clear inducement here. We had this valid OB there. I took my what? Second entry. Okay, here I had a break even because price came back and took my stop loss at break even. And then this morning I had this target also. Okay, and all this I was using the concept that I taught you. And this afternoon price taps into our weekly low here. You remember I taught you guys weekly liquidity. That was what price did here. It took weekly liquidity. I went down to 15 minutes. Then I went down further to what? To 1 minute. I got my change of character. Then there was a reversal into this zone, and then I was able to catch this trade, which was what? A ratio of what? 42R. Okay, 1:42. Because whatever I was risking, I made times 42 of that what? That amount. All right. So this is how the session liquidity also works. So let's go back there. Okay. So here price closed below but taps into what? A higher time frame OB. So this time, once price taps into that higher time frame OB, then you now go down to what? Lower time frame, get an entry confirmation, make your entry, take your trade, and you wait for your trade to what? To play out. Okay, so either you use single candle order block, that is if there is a formation, we'll be looking at that, or use the change of character with inducement. There are different scenarios in terms of the entry concept, so we'll be looking at all those concepts. Okay, now what do we see here? Price breaks this and then landing, now buys and take out this guy. So when it landing takes out the high of the Asia, we say that is a break of structure, but this time in terms of the session, the trading session, not in terms of the overall structure formation that we learn, because within these sessions the overall structure is being formed. Okay, but then over here what we see is that we see that price is also forming session structure, and this is a break of structure. Then we see, because we see market coming up this way, so it means we are in bullish momentum. All right, now if market breaks the Asian high during London session, then we can make that as a break of structure in terms of what? In terms of sessions. Now if market closes above, then it means that market is looking for the continuation. Okay, so as market closed above, you can see market closed above here, it means we are looking to continue with what? With the buy. Now if we see a higher time frame OB here, then we'll be looking to what? To sell based on what? Change of character. Market comes here, we sell. Okay, but if there is no higher time frame order block, then once market takes this area out, you can continue with what? Because we are in a bullish momentum, maybe there is what? A buy zone here, depending on, because there is inducement here. If there is a buy zone here, you take your buy and then you take profit at the what? Landing session high. Okay, now once landing session high is also broken, it means we are entering into that is when we are entering into what? New York session. And if we enter into New York and New York breaks the landing session high, what we should be expecting now is a reversal. Now there's something you need to understand. one session will always be manipulated in a day. Okay, so let's say if Asian session and London session is bullish, then the New York session is going to be what? Bearish in a short term or in a long term. Okay, so always one session is manipulated. So there is a time Asian session will be bearish and New York and London and New York will be bullish. There will be a time New York session will be bullish, London session will be bearish, and then Asian session will be bullish, London session will be bearish, and New York session will also be what? Bullish. Meaning at this time London session was what? Manipulated. So always one of them is manipulated. Okay, one of them is does the reversal. Alright, and we'll be looking at that on the main chart. Okay, so this can be traded in so many ways. Now when this also breaks here and it is not a sweep and it is candle closer, then we look for what? A higher time frame OB, like I explained here, and then we look for lower time frame entries. We take our inducement, we take inducement here again, we buy, we sell again. Okay, based on confirmation on the lower time frame. So this is how the session liquidity acts. So at the end of the day, we take out this liquidity, we took out this liquidity, took out this liquidity, and there could be a lot of ways. Let's say for instance, there are times, okay, it could be this way. We will have this movement like this, price will do this, come down, okay, break this, then come and what? Pick liquidity over here. There will be an extreme OB over here, price will tap on it and push down, okay, and then continue. That means this way, you see Asian is bullish, then it means we created inducement. Sometimes you could have it like this, where here will be your inducement, price breaks it, taps into a zone here, okay, and then pushes down. Now New York will also open, then New York will also what? Will also open, take this inducement over here, then tap into a zone over here, and then we continue downwards. Okay, remember I told you, you see here this guy is bullish, then London and New York bearish. Okay, and then it can be what? Opposite. This guy can be bearish, New York also bearish, then we will have London also bearish, then we have New York what? Bullish. So it's something you need to keep in your mind. Okay, that is just something you need to keep in your mind. So now let me just, because this one I'm just showing you the examples on the chart of how you can locate these areas. Okay, how you can locate these areas in the market. All right guys, so now we'll be using, for this particular one, we'll be using an indicator. Okay, in our trading, or the only indicator we'll be using is the session. The reason why we are using the indicator to help us with this is a lot of you don't know how to determine the where the various sessions starts by yourself. So the indicator will help you. The name of the indicator is Asian session range. Okay, so those of you using TradingView, when you come to the indicators here, you tap and then you just type Asian session, okay, range. Right, so this particular one, this one with the 3967 usage, you click on it. Once you click on it, it will appear on your chart like this. Okay, it will appear on your chart like this, and then the most active one, for instance, this is today's own. You see, so here today, for instance, as you can see, Asian was what? Bullish, London was what? Bearish, and you can see over here, what is the name? New York bullish. So I told you that always one is manipulated. So in this case, London was manipulated, and then Asia and what and New York were in bullish alignment. Okay, then if we come to yesterday, for instance, we can see Asia bullish, London bearish, then New York bearish. Okay, so yesterday Asia was what the manipulated one, then London and what and New York were all bearish. Over here we can see Asia is bearish, London is what bullish, and also what Asia bullish, London bullish, and then New York bearish. If we come here, Asia bullish, London bearish, New York bullish. You get it? So if we back test, you see the same thing happen almost every day. One always gets, here you can see Asia bullish, London bullish, and also New York bearish. Good. Let me now show you this, because this was also, I use this also along with weekly liquidity to, let me remove these drawings. Oh shit, I removed the indicator. Okay, I brought it back. So I wanted to remove this drawing, but it's okay. I think let me use GU, because I did that analysis on GU. This trade is not only the weekly liquidity I use, I also use the session liquidity. Okay, I also use the session liquidity as well. So here, as you can see, London got taken out, and then I realized market swept it at first, but later on market broke below, because market came to what to pick this weekly liquidity. After sweeping the weekly liquidity, it also swept this level. All I needed to do was to go on to my 1 minute time frame. Okay, so I went to 1 minute time frame, then let me zoom in. Okay, so I came down to my 1 minute time frame here. Now this is why those of you ask why I don't give signal. This is the reason why I don't give signal. The way I trade, by the time I come and type buy or sell on the page, the trade is gone, because I'm monitoring till my confirmation. So here you can see we have our last valid pullback, then we have our change of character, because already we've tapped onto a higher time frame demand. Okay, so we have our change of character over here. All I needed was a valid inducement, and then I take a trade. Okay, but watch here. Both the inducement and the order block were at the same spot. Okay, the inducement and the order block were all at the same spot. Okay, so this particular guy, all right, it took the low of this guy, so this is a valid pullback. Okay, so that is where the inducement was, and it still also was our unmitigated demand. So we call it a hidden demand. So this was where I spotted it. Okay, so once price came in, all I needed to do is to take my trade, because I know there is inducement, but below it we have the extreme. So this is my decisional OB. That is why I risk very little here. Okay, very little, because I know price could push down to this area, but then we don't have much imbalance, very little imbalance here, so I was not too worried about it. Below it, this guy has already mitigated everything here. Okay, so I was not too worried about it. All I needed to do is just take my trade and see what market does. At least I was risking very little, so there was nothing to be afraid of. Okay, so this was how I made this trade. Okay, this 42-hour trade. Okay, this one I didn't take much position. I took only 2 position. All from here, I didn't make any other entries along the way. I decided not to because it was during a reversal after news on the New York session. Okay, so this was how I used the session liquidity also to what, alongside with the weekly liquidity. We take London low here. Okay, take London low here. I didn't see any valid entry point over here, so I didn't make an entry. And then we also swept this liquidity again. Market broke down, and then we have this area also swept, which was the previous week's low, which is also liquidity. We now have our change of character, both inducement and then the demand is on the same spot. So mine is to make my trade and then allow my trade to what, to run, and then allow my trade to do what, to run. So this is how we use the session liquidity alongside with other liquidity methods that we have learned so far. Okay guys, so thank you for watching, and don't forget to subscribe to the channel Accurate Pips. Also, you can subscribe to my other YouTube channel, Mindset Studios. Okay, subscribe to it. I do drop educational videos there on different type of things. That one is a studio. Okay, it's a studio, so it's not just one thing like how here is dedicated to only forex. That place we have different things. We talk about investment, we talk about cryptos, we talk about forex, we talk about lifestyle, we talk about relationships, we talk about finance, a whole lot of things. Okay, and we have a lot of exciting things coming on that channel very soon, more exciting things. So do well to subscribe to that channel also, and stay tuned. See you guys in class tomorrow, 7 p.m. UTC time.